All right, everybody. Welcome back for another deep dive. You know how we do it around here. Digging into the nitty-gritty today.
Yeah.
We're tackling tariffs, those Trump-era tariffs
Right.
and their impact on the economy.
Yeah.
But we're not just going to, skim the surface. We're going deep
Absolutely.
using this really interesting article we found.
It's super interesting.
It's going to be a wild ride,
Yeah.
so buckle up whether you're, an investor trying to make sense of the market or just be curious about how these global trade policies actually hit us regular. Folks, this is for you.
For sure, this deep dive is going to challenge some assumptions about tariffs and, economic downturns.
Definitely get ready to rethink some things because things are not always as they seem.
Absolutely.
So like, right off the bat, this article doesn't just, talk about the, obvious effects of tariffs, right? It goes deeper.
Yeah, exactly. It dives into this whole ripple effect of uncertainty they created. And that's the core of it.
Okay, so like what do we mean by uncertainty? Like how did that actually play out?
Well, the article gives a really good example of the steel industry.
Uh-huh.
They got hit hard with a 25% increase in costs because of those tariffs.
Wow, 25%?
Yeah, and that led to job losses and thousands of them in steel and those related industries. So it's real people, real impact.
Yeah, that's huge. That's people's livelihoods.
Exactly. And to illustrate this even further, they use this example of importer Ian. Imagine you're this business owner
Yeah.
and the cost of your main materials just explodes because of these tariffs. What do you do?
Right, tough choices.
Do you buy a ton of it now, maybe lose money if the tariffs are lifted? Or do you wait and risk even higher prices later? It's a gamble.
Like a lose-lose almost.
It is, and businesses were stuck in this what if limbo, making it almost impossible to plan or invest with any confidence.
That's got to be so frustrating as a business owner.
Oh, absolutely. And, that hesitancy trickled down. It had this ripple effect throughout the whole economy. Think about it. Businesses delayed expansions, hiring slowed down, and, people started getting nervous about spending.
Well, holding onto their wallets a little tighter.
Exactly. This uncertainty just fed into this overall economic anxiety.
And then on top of all that, you have the media,
Oh, yeah.
all those headlines about trade wars and economic doom, like adding fuel to the fire.
Totally. The media narrative around Trump's policies definitely played a role in decreasing consumer confidence.
Right, because if you're constantly hearing about, economic disaster, you're going to be hesitant to spend.
Absolutely. People were bombarded with negative news, and it's natural to, react to that by being more cautious with your money.
So it's like a perfect storm. The tariffs themselves, the uncertainty they created, and then the media amplifying that fear.
Exactly. And what's even more interesting? The article challenges a pretty common assumption about interest rates.
Okay, I'm intrigued. What's that?
Well, they bring up Milton Friedman's interest rate fallacy, if you've heard of that.
I can't say I have.
So Friedman argued that sometimes, those interest rate cuts that we usually think of as a positive thing can actually be a sign of a struggling economy.
Okay, that's counterintuitive. Explain that to me.
Think of it like this. Imagine a doctor, frantically trying to lower a patient's heart rate that's way too high.
Right.
That's not a sign of good health, right? It's a sign of a critical situation.
Makes sense.
And sometimes interest rate cuts are kind of that they're a desperate attempt to stimulate a struggling economy, not necessarily a sign of healthy growth.
So like a warning sign almost disguised as a positive thing.
Exactly. And, the article points out that the Federal Reserve cut rates back in September 2024,
Okay.
months before a potential Trump reelection. And that timing seems pretty significant.
Yeah, why is that?
Well, it suggests that the economy was already, showing signs of weakness even before the whole election cycle could be blamed.
Right, so we can't just pin it all on the election.
Exactly. And that brings up the question, are we looking at correlation or causation when it comes to tariffs and the economic slowdown?
Right, like did the tariffs directly cause the slowdown or was it more complicated than that?
Exactly. And the article argues it's more nuanced than just blaming the tariffs. They dig into some historical context, comparing it to the mid-1990s.
Okay, what happened back then?
Back then, rate cuts didn't lead to a recession, but you see, the current situation had these additional red flags like high unemployment and a fully inverted yield curve.
Okay, now hold on. For those of us who aren't, finance wizards, what exactly is an inverted yield curve and why is it a red flag?
Haha, good question. So the yield curve basically compares short-term and long-term interest rates. Normally, long-term rates are higher because investors expect, bigger returns for tying up their money longer. But when it inverts, it means short-term rates are actually higher than long-term rates. And that signals that investors are like, uh-oh, we don't have much confidence in the long-term economic outlook.
So it's a bad omen,
Right.
basically.
Pretty much, it's been a pretty reliable predictor of recessions historically.
Okay, so it sounds like the article's saying that, tariffs played a role for sure, but the real culprit was this whole, like, perfect storm of uncertainty, negative media, and pre-existing economic problems.
Exactly. It was a confluence of factors that all came together to create this slowdown.
So it's like a much more complex picture than just tariffs are bad.
Right, and that's a key takeaway. If we're so focused on the tariffs as the sole villain, are we missing other underlying vulnerabilities that we should be addressing?
Right. What are the systemic issues that need our attention?
Exactly. That's something worth pondering.
It really is a lot to think about. Well, this has been an incredibly insightful deep dive. Thank you so much for breaking it all down.
My pleasure.
And to our listeners, the takeaway here is that, while tariffs definitely played a role, the economic slowdown was a complex interplay of several factors. Don't just take those headlines at face value. Keep asking those questions. Stay curious, and we'll see you next time for another deep dive.
See you then. Bye, everyone.